The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-927-6648. This is the Commodities Hour for TFNN, and I thought I would start the show with just a little bit of a tutorial here. And what I did was I put in a daily chart of coffee. I personally don't trade coffee. I only trade cocoa about once every year. I trade sugar maybe 2 or 3 times a year. Coffee is just a little too thin for me. But, now the liquidity is much better. 30 years ago when I quit trading coffee, it was a little, it was very thin, but now it's still, I just don't need it anymore. So, but basically what it's showing is that you have an AB equals CD forming, and it's making a double bottom. Now, if that double bottom fails, that'll turn into a butterfly. So what you'd be wanting to watch is to see if the support at the 149 level holds. But this is how a double bottom will be formed if you keep an eye on that, because that's the main thing of what we're trying to do here is to find low risk trading opportunities, and also to try to find out when these patterns work and when they don't work, and that's the real beauty of what we're trying to do. Now, I have a really important announcement after this next chart, but I want to cover some of the things that we were talking about before, and one of them is the chart of Intel. And if you'll notice, we've had a Gartley failure in Intel. We had a beautiful buy down there at $21.29 a share. We rallied up to $22.44, which is just $1 a share, 5%. And then yesterday we had the big gap down, and then we broke below the 786. That is a Gartley failure, folks. There's no other way of looking at it. So you have to remember that these patterns don't always work, but when they do, those are the ones that you really want to, take advantage of. So the announcement that I have, this is very important. Fortunately, I've been around for many, many years, and all of my years have been in trading. And yesterday, as luck would have it, I was finishing up the day's work, and I got a phone call from someone who I haven't spoken to for many, many years. His name is Bill Foster. And Bill, years ago, ran a newsletter, an astrological newsletter. It was very, very popular, called the Rocky Mountain Financial Forecasting. He lived up in the Denver area, and he had a very, very terrific track record, and he had some great stuff. The problem was he didn't like working with the public that much, because he couldn't take it with, when someone would give him criticism, which we get more and more these days. But after a while, he said, I don't really need this. And so he basically retired and became a full-time trader, and that's what he does now. He also does a few other things, but he's very, very good. He's an old friend. He's just a little bit younger than me. He's still in his 70s, and he is quite good. So he's going to be on the show on Monday at 9:30. And the important part of this is he's going to give us what he thinks is a once-in-a-lifetime $1 million trade. I don't know what it is myself, but he really thinks this is something that it's worth it. And, folks, the guy's been around a long time. He's pretty successful. He's still doing the same thing, so that means he must be doing something right. And he's certainly got the background for it. He's got 2 master's degrees, and one in psychology and another one in business administration, and then he has a BS degree also in accounting, and he was a first lieutenant in the Vietnam War and made it through several of the really bad scrimmages. He was in the Armored Regiment, 5th Battalion, Green Berets. So dude is he knows what he speaks. So anyway, Bill Foster will be our guest at 12:30 on Monday, and it's probably going to be a one-time appearance. So I would certainly listen in if you get a chance. I'm sure it'll be archived, but I'm looking forward to it. I really enjoyed the conversation last night because we We talked about old friends. Some of them have been deceased, of course, and some of them are still alive. And but it's been a long time. It's been more than 10 years since I've spoken to him. But he's worth listening to, and he's very personable, and he'll certainly give a lot to you folks at at TFNN, because he's really good. So that'll be at 12:30 on Monday. Bill Foster, the former publisher of the Rocky Mountain Forecaster, he wrote a book on timing of soybeans, and he also wrote about 35 or 40 different articles on astrology back when nobody was doing that kind of stuff. So, okay, let's get down to the work at hand, the stock we've been watching because of its pattern recognition characteristics. I know it's not commodities, but we're watching this stock just because of the learning capability of looking at pattern recognition. I'm not going to go through all the patterns in Apple because, we see them all the time. The important thing to remember here, and this is what we talked about on Monday's show, and we talked about it on Wednesday's show, and we have to talk about it today. When the stock gapped down yesterday, that was a very strong indication that the market wanted to go lower. Our original target was at $5.66 a share, and now we've been as low as almost $5.42, I believe. And so if you want to buy this stock, you have to be patient and wait for an easier place to enter it. Right now, you're gapping down, you're leaving bodies all along the way. We're very, very close to the May low at 5.30. That's when 5.30 a share. That was the last major buy that we had, and so this is real interesting what we have going on here in Apple. So we want to keep that in mind, because that's that's an important thing of why we do this pattern recognition thing, and that's the main thing. Now we want to move over to our commodity department, because we've got something really big happening, folks. This is going to be exciting, and you're going to know by tomorrow, because you have a tremendous chance here. The problem is there's risk and opportunity in everything that we do, but the one that we have coming up, we have a major grain report tomorrow, folks. This is the last grain report that we get, because the harvesting is done, and so they know pretty much what the corn crop is going to be, and soybeans and stuff. So this is what we're looking at here in the corn market. Now it might not be it might not work out the way that we want it to, but we have to look at this just because of the pattern recognition and the symmetry that we're having in the corn market. So I'm going to put in, and if you ever look at any of the charts that I post, this is one. If you're interested in corn, you really need to look at this one, because this goes back a couple of years, and it shows the low we made in corn way back at the $4 a bushel level, back in 2010, and then the market had a very strong bullish run into August, and then it had a very bearish retracement that stopped exactly at the 618 retracement, and then we had the drought, and of course we were all over this. We had Rich Anderson on it almost every other week, during May and June, talking about the potential for this, and it certainly, turned out to be, a huge trade. But what's important now is that after the 61% retracement was made in May, the market went sideways for just about 6 weeks. And guess what's happened now? The market had to move up to the high that we made back in August, when we were looking at the TV tubes, and they were showing us that the corn was popping in the field because it was, burning on the vines, and that was the top of the market, which is to be expected. No different than what Apple did when they were showing you all the people standing in line and selling iPods or whatever they're called, iPhones, at 3 times value on eBay. I personally don't know anybody who would buy one of those for that. But what's important on the corn here is that we have had the run up to the highs, and then we have come down, and we have stopped at the 382 retracement at the $7 a bushel level. Now we have gone sideways. And if you look at the similarities in the little gold chart, little gold circles that are on the chart, you'll see that these patterns are almost absolutely identical. The markets ran up, it pulled down to a 786 retracement, and to me, we are setting over what I think is a major buy point in corn. The problem is this grain report that's coming out, and they're beginning to believe there was more corn harvested than actually was thought, and so they're saying that the corn report could be a bearish surprise. This chart is not saying that it's going to be a bearish surprise. So the report comes out at 9:30 in the morning Eastern Time tomorrow, and it's going to be very interesting what happens. The corn will not open unchanged, folks. It will open either a lot higher or a lot lower. The problem is the options that are related to this will not help you very much, because the range of the move will be crazy. So you have to decide, look, I want to take the risk here because I'm going to try to risk 20 cents, because if it gaps down more than 20 cents, you'd be wrong, and it could gap down 40 cents, which would be a $2,000 loss, but it could also gap up, $1 or 50 cents, and so this is what you have to do. Now let's just think about this trade a little bit from the commodity perspective. We are in an uptrend. We made a low in July of 2010. We made another low in June of 2011. That was at the 61% retracement. And now we've made a low in September. Actually, it came in late August at the 382 retracement of that. We all know that 382 retracements, are usually the most bullish of the move. So this is what we have. This is certainly trading with the long-term trend. The long-term trend is up. The short-term trend is down. The intermediate term is basically sideways because you've gone into congestion here. So I can't tell you people to buy this because the risk is too great, but this is what we're looking at. I am personally going to be buying corn, and we will be looking to see if this market is going to gap up. But it could go either way. But the odds favor, like the old quote, chance favors the prepared mind. And this is what we're trying to do, is prepare ourselves for this. The trend is up. You got a lot of things to the upside on this, and not only that, but the people are expecting a bearish report, and that's why I think it's something that we want to watch. So tomorrow morning I will not be around during the time the report is out, but we'll certainly look at this on Monday to see what happened with it. But this is why we're watching, the things that we're watching real closely. Now, yesterday when we were on the show, we were talking about the breakdown in the E-mini contract, and it's one of the futures that I look at all the time. And it still looks to me like we're heading towards that 1368 level in the E-mini S&P futures. You had the rally off of the full moon on the let me see. The full moon was the 29th, and now we have the new moon and a solar eclipse coming in on Tuesday, which is the 13th of November. So that's where I would expect to see the market to come down. We've got to take a little break here, folks. 877-927-6648.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risks, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're just talking a little bit about the S&P because we were talking about this on Monday and also on Wednesday's show, the fact that it looks like we have a potential for this to go down to the 1365 level. Most probably, if it's coming down like the way it is now, the low would be made on Tuesday, which is the solar eclipse and the new moon. So we want to, watch that to see if it's going to, make its way to that point. Also, what we were doing yesterday is that we were looking at the gold market, and the gold market, made a 50% retracement off of the November 5th low, and moved over $60 an ounce to the upside. It's backed off to the 50% level on gold, and there's a really strong probability here that if we can get gold above 1734, that it'll be off to the races. So we will take a look at this. Now, I will mention this. I've known Bill Foster a long time, the fellow that's going to be our guest on Monday's show, and I know he likes gold. He was one of the few people that were really, really bullish gold when Tom O'Brien was bullish gold, and of course I was too, but that was back when gold was $300 an ounce. And so, I don't know if this is going to be part of that $1 million trade that he's talking about, but it's something that you ought to pay attention to, because someone that's been around for a long time, is worth listening to, just because of the experience, that they have, and that's why I think it'll be interesting to do. Now, the next commodity that we want to talk about is one that is very interesting, and that is the Treasury bond. The Treasury bond pattern, because we were looking, to short that at the 150.08 level, and we had our stop right at the high at 150.19. It gave us another chance today because we backed off a little bit, and then it rallied up to the 150.10 level, and so it made the risk relatively small. It's a little bit below that now. But the interesting part about this chart, if you go into Tiger TV, is we had this big wide-ranging bar, post-election. Actually, during the election, it backed off to 148 level, and then it went up to the 150 level. It's $2,000 a contract, and then it took out the highs of September and October, but has not really gone anywhere. And we also mentioned that the notes were doing the same thing, and the notes actually looked a little bit weaker than the others. So the bonds look like they have a potential for backing off here a little bit. And but if we do clear above the 151 level, we could easily go up and make a new high up into the butterfly that I'm looking at, which is up in the 150 155 level. So that's something that we are watching right now, and we'll wait and see how this transpires, as we go through, the days and, weeks that we'll be watching these things. Now, the other commodity that we talked about yesterday, that is, very, very important. And that, I wanted to mention, before I get back, I want to go back to the gold chart, because this is what we were watching gold this morning for a potential buy after that, that big move, because we had a, strong move down. And we were trying to buy gold. I'm going to do the 5-minute chart just to give you an idea of what we were looking at, and you'll be able to see it a little bit better. And oops, I can get this out of the way. Hold on a second, and we'll be able to see this. Just a second. I'll get everything done. When I move these charts around, it makes them a little more difficult to work with, because the numbers, jump out a little bit differently at this. Yeah, this would be a good place to take a look at the gold. We're going to do a 5-minute chart on gold here, and you'll see that after we went up and hit that 786 at the 1725 level yesterday, which was a 786 retracement of the whole move down to 1702, and what we're looking for now is a potential buy on this. And if you'll look at the Tiger TV, you'll see that it formed a nice little Gartley down at the 1714 level. And that's what you try to do, is you go down to a smaller time frame and try to find a pattern, that fits with what you're trying to do. And at 1714, we were making an ABCD correction, and it was the very first one that we had that occurred from the low at $17 dollars per ounce. The important thing here is, once we can get gold above 1728, it's going to be off to the races, in my opinion. We're going to take a little break here, and we'll be right back. 877-927-6648.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations, including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, good afternoon, folks. This is Larry Pesavento for the Futures Hour, and I think the future that we need to really be watching now is the Treasury bond future. We talked about gold, stopping up at the 786 on the shorter term time frame at the 17.25 per ounce, and once we get above 17.30, I believe we're going to be going, much higher in the gold market. But right now, we're at a very critical level in the Treasury bond market. And what I'm going to do now, I'm going to put in to Tiger TV. It's a chart that I think is as important as the corn chart that I featured earlier in the program, and that is it's the Treasury bond chart. But what it is I put it's the Treasury note chart, and it shows that we've had these lower highs, during September and October and November, whereas the Treasury bonds have actually made, broke out above those highs. It hasn't gone anywhere because it's at the 786. Now, this divergence that we're having, in other words, the notes are the shorter-term paper, that's 1 to 5 years, and the bonds are the longer-term paper, 10 years. And higher, and so this is why I think it's important, is we're seeing a divergence, and you don't see a divergence in these instruments very often, and these are huge, folks. These trade a heck of a lot more than any of the futures that we trade. It's not as big as the Euro or Forex trading, but this is huge amounts of money. These are the PIMCO people and the people that handle the billions and trillions of dollars. They put their customers in these because they're assumed to be very, 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 very safe. But this divergence that we're having is very important. And I give you a perfect example. I've been talking about the divergence in the Dow Jones Transportation versus the Dow Jones Industrials for weeks and weeks now, and that certainly, worked out the way we thought it was going to. So this is one that you want to really be watching closely, because the bonds are up against this 786 level. We've taken out the highs of the last couple of months, but the notes, shorter-term paper, did not. So that's something that is something that you need to know for trading, and it's all amount of pattern recognition. Some of them work, some of them don't, but these are the ones that we're trying to look at to give us an edge, to see if these are the ones that are going to be working. Now, I did have a question about the stock, and because it's related to commodities, I wanted to bring this up because we are at a very critical level here in the stock of Newmont Mining, because we were really looking at this down at the $43 level area, and this is another example of a double bottom being formed, folks. Do you remember when I started this show, I put in the chart for coffee showing that double bottoms are made when an ABCD formation completes? Here again, if you'll look at the chart for Newmont, you'll see that the time frame between June and August saw an ABCD form down at the double bottom, and that's exactly what it did. It took out the low from May by just a little bit, and then it backed off. But what's happened now is that after we had the big rally of more than 25% in the price of Newmont, we went up to that 61% retracement, and then what's happened over the last 7 weeks is that Newmont has pulled down to the 61% retracement, down at the 48.72 level. Right now it's trading at 49.21, and so we are looking at a potential buy here again in Newmont. If you wanted to buy gold without the volatility and I can't think of the word right now, but if you wanted to proxy buy gold, you could buy the Newmont Mining. It's the largest of any of the U.S. mining companies, and you could buy it there and not risk more than a point, from where it is right now. So this is the chart that we're looking at, and some of these are related to these commodities. So I try to give you an idea of what we're looking at when we're watching some of these, and that's the importance of this lesson, I would think. Now, the next one we want to take a look at, because we've talked about it here the last several days without nothing has happened to it, because it stayed right at the same level. The stock market has broken very badly over the last few days, but the copper is still holding above the 618 retracement. In fact, it's there right now at this $3.46 per pound level, and so it looks like it wants to it's very oversold now because it's been about 11 days down. So the copper is either going to cascade to the downside from here, or we'll start to see a little rally, which would be my opinion. And I would be a voter that we probably will get a rally in the copper from this level, just for the fact that it's held, the 61% retracement level for so long. Now, we do have along with the report that we have in the corn, we also have a soybean report that's going to come out, tomorrow, and it also will be affected by quite a bit. And all I wanted to do now is to show you the chart of the weekly chart on soybeans, because it shows you two examples here. It shows the beautiful harmony that exists in the soybeans, the fact that it makes the numbers of 786 and 618 almost perfectly. And what we're doing now is we're right at a 61% retracement in the soybeans, coming off of our low from last June. That's when the drought really started and the thing moved up, and so we went up and we made a double top in soybeans up at that $18 per bushel level, and now we've come down $3 a bushel, roughly $15,000. and we're setting at the 61% retracement. Now, the difference between the soybean chart and the gold chart and the corn chart are I think, quite significant. And the reason why is corn is much more bullish than the soybean chart. It went much higher. That's the first thing. Second thing is when corn pulled back on this last move, it could only pull back to the 382 level, whereas the soybeans pull back to the 61% level. And so that's telling you that if you have to buy something into the corn report and you want to take an educated guess, that's what you want to look for. Remember, with every opportunity comes risk, and this is what we have in the corn market now. We've got the final crop report coming out tomorrow, and then we have this pattern that we're looking at that is extremely bullish, in my opinion. But if you're wrong, you're going to lose $1,000 to $2,000 really quick. But if you're right, you're going to make a lot more than that. So the odds favor that corn is going to go higher after the report. Now, that's what I said here was odds, because that's all it is. It's just a probability that this could happen. So this is the importance of what we're looking at when we're looking at these particular patterns. And the corn is a much easier trade than the soybeans for several reasons. And I mentioned those before, is the fact that it's only pulled off to the 61% retracement, and it's not whereas the soybeans pulled. I said that wrong. I'm sorry. Corn pulled down to the 382 retracement, whereas soybeans pulled down to the 618 retracement. And so that means that corn is much stronger than the soybeans at this particular time, and that's why you want to be looking to be a buyer of the corn and not the soybeans. Also, soybeans are quite a bit more volatile than the soybeans, and that's why you want to be able to go into the corn. That's my guess. So we will have a position. In fact, we already have a position in corn going into the report tomorrow. We don't have a whole lot of opportunity to hedge ourselves, or we don't want to hedge ourselves at this particular time. But we will, really be looking at the situation where, if the report is good, you're going to make it'll be a very, very profitable trade, or it'll be a very, very unprofitable trade. There's not going to be any ifs, ands, or buts about it. I don't think. That sometimes the market will surprise us, but we'll have to, cross that bridge when we come to it. Now, the next one that I want to cover is one that is we talk about all the time, of course, and that is the crude oil market, because we've had some pretty big moves happening in the crude oil recently. In the last 2 days, they've had these $3 and $4 moves very, very quickly. And what I think is occurring in crude oil, and I'm not 100% sure, of course I'm never 100% sure of anything, and that is that crude oil has a very high probability of coming down to the $83 per barrel level. That's going to be a Gartley pattern forming at the 786. The original one that we looked at, holding at 86, which was 87, which was the 618. We had a pretty good rally of about $5 a barrel off of that, and then we're making another ABCD, and it looks like we want to get down to the $83 per barrel level. Folks, if we break below $82 a barrel level, this means that we could be looking at the old lows from last year, this year during the summer, during June and July, at $77 per barrel. And if we break below that, that's when you really start seeing, the price of oil really going lower. And if oil does that, it's going to be very difficult for all of the commodities out there to, go higher, in my opinion, because, people think that this QE2 that they have is going to be, flooding the market with dollars, and we're going to be looking at inflation, which history says that's what it should be. But, a lot of times history, will prove yourself wrong, and all I'm saying is I'm watching these commodities, to make sure that this is the way you want to, trade this. So there's a lot of support in the oil down at the $83 per barrel level. Today we got to just above 84 and change, so we're within a heartbeat of that pattern. So we want to be, watching it, very, very closely at this particular time. That's what we would be doing. Now, the next one I want to quickly go into to take a look at the euro, because we've been watching that quite a bit. I'm going to do a daily chart on the euro versus the Australian dollar. I had a request to have someone take a look at this, and this is what I'm going to post in now. It's the cross rate between the euro and the Australian dollar. And the reason why I believe this is a very important cross rate is the fact that Australia is very, closely aligned, to mining stuff and also for wheat and other commodities and things like this. And this is why, we're looking at this. And as you can see, it's a very, very harmonic chart. From last February, we ran up into May, and then we made a 1.618 expansion down at the 161 level, and then the market, 1.16 level, and then we ran up to 1.28, which was the 786 level, and now we're pulling down, and we're getting very, very close to a 61% retracement of this move that's coming in right now. That comes in at about the 120.50 level. So we're still about 2 cents away to see if that is going to be it. Now, I actually have never traded the Euro Aussie cross. We basically trade the euros with all the major, trade the U.S. dollar against the majors. The euro, the pound, the yen, Canadian, Swiss, and the euro. And so those are the ones that we usually trade. But this one is interesting because it lines up with what some of the commodities are doing, and that's why I think it's something that we should watch rather closely. Now, since we were talking about the euro, someone asked about what we were mentioning yesterday on the show with the big swings that we're having, and all I do is when I see something really volatile, I move down to a smaller time frame to see if I can get an entry so I don't have to risk an arm and a leg. And if you'll notice, I put up the 5-minute chart on the euro, and it shows the big ABCD that occurred right at the election when it was trading around the 128.75 level, and then we came down, very sharply to the 127.30 level, and then we had the ABCD pattern form during the show yesterday. And that's what I was showing, is the fact that we should get up to 127.85. Well, the high after the show and everything was 127.85, and then the euro, broke down, quite a bit from that level, and is now trading at the 127.34 level. What I'm going to do now is I'm going to show. Well, it would be a. I can show the. I'll show the pattern that we did this on, and you'll see that we, I don't know if I can get this done or not. Hold on just a second, folks. Give me a second here. Yeah, there we go. Yeah, that'll show it a little bit, and then I'll put the other one in so we can see the larger ABCD that we were looking at during the election. These are all I'm doing now is showing you how we handle the market when we want it to get a very short-term entry point so we don't have to risk very much. It's all about risk is what we're dealing in. Anyway, this is what it looks like on the 1-minute chart, and so, this is what it looks like on a 15-minute chart, because this is what we put into the Tiger TV yesterday. I'm trying to keep it consistent. Now, we have something happening right now that's very important, and that is because it's related to commodities, it's the Japanese yen versus the U.S. dollar. And we're taking a little break here, and we'll be back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, what I've done is I've posted into the Tiger Den and the Tiger TV the Japanese yen versus the U.S. dollar, because we are completing a beautiful Gartley pattern down here. We just completed it a little while ago while we were on the air, and that was at the 79.56 level. We're a few ticks higher than that, but it's still in the buy zone. If you were to buy this here, you don't have to risk more than $300. You use about a 30-pip stop. But as you can see, it has beautiful harmony going back over the last several weeks. The high was made at a 1.27 expansion, and then this first low came in at the 618, and then we rallied up to the 618, and that made the formation of the AB equals CD Gartley down here at the low of the day a little while ago, and that's a pattern completion. That's Mother God and country. This is what you have to like. If it works, this is the kind you want to be that you want to be looking at. So I want to end the show with something that I mentioned earlier, and that is the corn, because this is the one that if you like pattern recognition and you like symmetry and you like trading with the trend, you must look at the December corn contract here, because we have completed a 382 retracement. We've gone sideways. It's done exactly the same thing that happened when we made the 61% retracement, when the crop was being planted, way back in May. Now, this is the last of the big crop reports that we get, because if the crop is in the bin, the next thing that will happen is they'll do planting intentions reports on how much corn they're going to plant next year after the drought. And believe me, they will plant a lot of corn, given weather conditions. So this is really the one that they hang their hat on. This is equivalent to about 3 non-farm payroll reports in a row. So this is really something that is, pretty good, interesting to look at. Someone asked me about the next P-index date. I'm not actually sure. All I know is that Tuesday is the solar eclipse and new moon, and that should be pretty big. But the big one is on November 28th. That is the lunar eclipse and the full moon. That will be the bigger one. Lunar eclipses and full moons have more power than solar eclipses. And the reason why, in my opinion, is the moon is closer to the Earth, and it gives more, gravitational pull, whatever it is. And then, that's why we think it happens. But frankly, I don't know, but I don't know anybody else that knows either. Maybe Bill Foster, who will be our guest, on Monday, will give us an idea about this. He's a really, really smart guy. He's very nice and quite personable, and he's always been very, helpful and stuff. I think you'll enjoy it, and I hope if you have any questions, about astrology and stuff, you'll give us a call, because he has not made a personal appearance in years. He's doing this as a favor to me, and frankly, I don't know what to expect, but he is promising a $1 million trade, is what he's saying. And believe me, his research, back in the days when he was doing it, boy, they lined up, because he had a very, very popular newsletter, the Rocky Mountain Forecaster, and, he just went into private trading because he thought it was a lot easier, which, believe me, it is. But you don't get to meet the nice people if you don't put yourself out there, and, you can't teach people some of the things that you learned if you don't, get yourself out into the public eye and learn to do some of these things, for yourself. And all I try to do is lead people in the right direction. That's, basically all you really can do. One of the last chart I'm going to point in here, because we're getting down to the wire, and that's the silver. Silver held the bottom at the 50% level. That was after the triple bottom. And that's it, folks. Have a wonderful day. Live every day in an attitude of gratitude, and may God bless.